Okay, guys. Sorry for some technical difficulties there. Computer crashed. So we're going to go give this another shot. Okay. All right. And we're back. Yes, sorry about that. The computer crashed. We're going to give this another go. Now, it is the end of the first quarter of 2026. So it is a good time to analyze, reflect, and rebalance things according to the data that is in front of us. Although some is unchanged, some has changed drastically. Now, let's thank this broadcast's sponsors, which is Corsair, Export A cigarettes, and Red Bull. So, that being said, prices have obviously come down even further than their prior trough. So we are still following, and we have not seen the bottom yet. Many people seem to be focused on the price of oil, but ignoring all of the things that the oil price at these levels truly affects. Whether that's input costs, delivery costs. I mean, simply spend 5 seconds of your time and think about it. And it's not hard to come up with scenarios. Now, again, 2008, oil prices skyrocketed. Again, it's not the supposed price per se. It's more so the rate of change in which it has gone up that causes these various shock waves. And you combine that with the high interest rates, high inflationary environment from government spending on many other things, it's not hard to see why people have not both had the time or the spare cash flow to designate an allocation to a extremely small market cap proof of work basket of currencies. Some of these networks remain more than 10x negative in terms of cost to mint or the cost to produce. Some of them have improved slightly. Now, I would love to have a cross comparison of the exact state of these networks, but I just haven't had the time to truly input it in. Let's be facing it. No one here is utilizing Trillium's research products. So it's not hard if you truly wanted it to get a hold of me. And we could talk at a much more advanced level on what to do with the information that we talk about briefly in these broadcasts. So the big thing to note here is that electricity costs continue to go up, which means it's more expensive to produce these proof of work coins. What is very ironic and somewhat humorous to me at this point, although you don't have the ability with a proof of stake network to produce the coins unless you, quote, stake it to these validator nodes and what have you, it still costs electricity and hardware to secure these networks. What they've done is, again, under the famous government style speeches that Van Buren and other proof of stake advocates uses for your convenience, for your safety. We will take care of the security in the back end of the network for you. And what has led to over 70% of Ethereum and Solana to be staked and held in centralized locations in Amazon Web Services servers, which allows not only instant and unwarranted access by any Alphabet agency to censor or block, monitor, or surveil your transactions and transaction history, but also it's a central point of failure. So, with a proof of work network, I can choose, albeit at a substantial loss, to purchase the hardware, formulate a game plan, build the infrastructure, both physical and digital, select the pool, etc., and produce these coins and hold these coins in self-custodial wallets created by my own two hands. You cannot do that with proof of stake. And what I find fascinating, I did post it on Twitter a couple weeks ago. Van Buteren's famous speech before taking it, proof of stake, like Ethereum, obviously we're talking about, was he was tired, quote unquote, of not being able to do things on the network that he created as easy as he wanted to because it was proof of work, and single-handedly made this a Cuban-style dictatorship overnight. And as you notice, the price, the network utilization, the innovation, the curve is flattened substantially. It is as flat as a board and declining. Notice, while they're telling you to have confidence in proof of stake, the node operators of Solana, Ethereum, and many other, most notably Ethereum, XRP, the largest and most comprehensive fraud ever pulled since Enron. It makes Enron look like they were absolutely the best the world had to offer compared to XRP. The dump rate per month is in the millions, and they paid their bribe to the various agencies to allow to be operational to this day. Eventually, that scam runs out. Likely after this administration leaves office, significant prosecutions will begin across the board for what is all but apparent at this point, blatant corruption taking place globally within the federal jurisdictions around the world. So also that administration has passed things with the SEC as of early this year that you can now branch out if you're a structured product provider, and you can now make an ETF that consists of substantially more than one single coin in your ETF. So now, instead of just the Bitcoin ETF, you can have a basket of currencies all accessible in that ETF structure. So when the Winklevoss twins did this Zcash, I think they own upwards of multiple percentage points of the network at this point. Although I would absolutely advise to never invest in Zcash or its ETF, especially, it did mark an important milestone in showing us something that is certainly plausible for the future, which is a basket for proof of work cryptocurrencies. Again, if there is a market for any fee that can be attached, you better believe that there is a financial incentive, therefore fast tracking its creation. So there will be a structured provider making a proof of work ETF. Now, what are its components? What are they allowed to make? Obviously, I would see Monero being excluded potentially. But again, to have this optionality even within the realm of possibility is absolutely exceptional. Now, for some of these coins that, again, I had a Substack article I posted, I did repost it on Twitter, I believe, to a semi-lukewarm audience as always, because obviously primarily I'm equity focused. But people seem to be understanding these concepts now that something is very apparent when you log into a crypto exchange and you start searching the directory of what you can buy, and they're all proof of stake, and they're all the same. In fact, most of them can be held in the same fucking wallet. It begs the question, well, what differentiates each coin from one another? The answer is nothing. XRP and Ethereum and Avalanche and Solana, they are all the same vaporware. Those nodes that we just discussed, consolidated and concentrated in these server farms, are honeypots for the hackers. And it's simply a matter of accessing it. And it's not a question of if, but when. These will be breached, they will be hacked, and user funds stolen. It happens over and over and over again with proof of stake networks. The only time proof of work has hacks is, well, people that mine to exchanges, which is obviously this late in the cycle an obvious fact. Now, why does proof of work have such liquidity is a frequented question that I must always answer with people. And the simple reason is, and I've talked to Netcoins, right? That's BIGG, publicly traded Canadian crypto exchange. I've talked to the CEO directly. I've talked to many other high-level C-suite executives in terms of why is this the case? And after a few years, it's abundantly apparent. And this all the way goes, by the way, goes to the same effect with publications, whether it's Messari, Token Terminal, CoinDesk, I mean, you name it, okay? Including the exchanges like Binance, the offshore ones even. The reason why it's proof of stake and tokens, so layer 2, the scam coin, the open fart coin, all that absolute garbage, which is only publicized as a distraction. But why is it publicized at all? This is the main question that I have to answer. And the simple reason, although the world is complex and there's rarely a simplified answer to be given for anything, the most eloquent way I could put it is they are paid, to list or review and document and push this nonsense. Now, some of it is lack of knowledge, right? And so the other thing is they are paid, the same people who are paid to list these coins and paid to post articles painted in a positive context and avoid the negative ones, are also paid an equal or larger amount to avoid proof of work coins, proof of work developers, suppress the truths, proof of work, suppress all these different attributes that, if you are fortunate enough to have any of the mentors that I had, is an absolute abomination and a disgrace and spit in the face of blockchain if it's proof of stake. Proof of stake is a monarchy. It is a dictatorship. It is an outright control mechanism for those to hunt and target any would-be investors. And proof of work, especially the ones that obviously we have vetted and we continue to support, mine, and watch carefully, are for the most part completely absent of a decentralized structure. There is no compensation. There's no management team. Sorry. There is absolutely no central point of failure. In fact, Cadena, using the PACT algorithm, again, let's rewind a bit. I'm sorry for losing my train of thought. Proof of stake is all essentially one algorithm. It's all garbage. And guess what? You're not allowed to see it. It's not open source. It's junk. Okay? Proof of work, not only is it all open source, blah, blah, but you need nodes. You need miners. You need hardware. You need to extend electricity inputs to get the output of that coin, to even have it created. There's no cost to produce a proof of stake coin other than, a little bit of node. It's really, it's 1/1 millionth the cost. That cost means that it's real in the sense that for $5 on the Ethereum network, you can make a token. So anyway, these different algorithms means it operates like Linux to Windows to Mac operating system to the Graphene OS operating system and what have you. It's like that. Whereas proof of stake is all the same. There's nothing. The main point is there's absolutely nothing of value there. Solana had to openly come out and say that 75% of their volume was absolutely fake and ghost. It was all wash trading. It's all churning. Who does the churning? The market makers. The market makers are paid who? By uneducated retail investors. Who does the facilitation of the onboarding of these retail investors? The exchanges. Who pays the exchanges? The proof of stake coins. Who gave the developers of these proof of stake coins the cash? Private equity funds. Private equity wants an exit, and you are the exit liquidity, as many people will tell you. Now, although this model is obviously played out at this point, it's ridiculous that rather than simply pop the hood and start looking at the number one asset in crypto is Bitcoin, right? Whether it's Iran, as they call it, okay, or Qatar, or United States, or hackers, or cyber criminals, or patriots, or now United States government municipal bonds, with Bitcoin being pledged as collateral. The use cases and the various adoption comes from the fact that it's proof of work. No one can stop you from mining Bitcoin, running a node on Bitcoin, or shutting down the Bitcoin network. Now, whether you like or dislike Bitcoin as a investment is one thing, but the proof of concept is there. And this brings me to my next point. To pretend that it's only Bitcoin, I believe, is a disservice to all the other work that's been done by so many other proof of work enthusiasts and open source developers, miners who have an abundance of knowledge, etc. But I could tell you what it's not, and that is not proof of stake. Proof of stake is a joke. Okay? Proof of stake is a fraud, and it's meant to be there to stop you from reaching the most obvious inflection point, which is that proof of work is crypto. Proof of stake is just software backed by private equity. Now, that doesn't mean that good projects aren't built over top of those networks. But what this does is narrow the field of investable assets from thousands to probably under 20, realistically. And you can take that 20 and you can make your own basket of cryptos to hold in your portfolio. Weightings, again, keen to anybody else? Oh my God. Wow. How you doing, man? Yes, exactly. Flux. Guess what? Flux, yes. Flux is another one where just went proof of stake, right? I mean, for those of us who have, seen that story, there is plenty of imitators of various bad components of crypto. Okay, but the main thing, I'm going to bite my tongue on this right now, but I want to focus on what we can do. What we can do, as always, things start with education. If you are an educated crypto enthusiast and had any good type of mentor, which I've been fortunate to have plenty in with some of the people I regard as those brilliant people I've met a long time as my guidestones. And you would not be investing in Flux. You would not be investing in Solana, something with a 14% annual inflation rate, infinite supply. Why don't you just invest in Canadian dollars at that point? Because it's the same. It's literally the exact same metrics. Better yet, why don't you just buy Cuban pesos? Okay, so even more hilarious is that yeah. But even more hilarious is that there are people who are just now starting to buy, these crypto ETFs. So yet again, missing the most important attributes of crypto, which is self-custody. So you're going to hold a proof of stake coin with an infinite supply in an ETF, not even taking custody, and paying a management fee. I mean, that is just absurd. And I'm fortunate enough to have been educated on how absurd that is. But if you don't know, then how would you ever know? Obviously. So it begins with education. And education begins, with trial and error, of course. We've all been there. We've all made bad allocations. Exactly. No central bank currency is immune to this inflation rate, this devaluation. And again, with the obligations for pensions and other, whether it's government critical infrastructure, what have you, the inflation, all they have is they've been exposed as the only option they have is to print money in perpetuity. And this also makes assets go up. This gives the illusion that your crypto is worth more, but it's just the dollars are worth less than they were. So fascinating is that the proof of work cryptos that now cost more than ever to produce and require more advanced hardware than they've ever needed before, therefore make it more valuable. So the cost to mint age-old retro metric stands true to this day. I mean, that's what it is. Now, where I tend to lean towards monetary, upside is when we're talking about these other networks Ergo, for example, is like 90% mined. I have the Substack article with the more detailed numbers. But yeah, we're talking about 90. Almost half of Kadena is now mined. And by the way, free of any centralized control, it is now an entirely decentralized entity similar to something like Litecoin, where the team walked away. The chain still is running, which, regardless of you think of that particular ticker symbol, proof of work doesn't stop running. If the team walked away from Ethereum tomorrow, the chain stops. So eventually the market will figure this out and it will reprice accordingly. So how far in the negative is mining? Well, depends on a number of different, valuation metrics, however you want to look at it. But I would say on average, if you smoothed out the curve, at least 5 to 10x the cost to produce than it's currently worth. So right now, a K3 ASIC, as an example, on Bitmain, mining Kadena will get you about 3,000-4,000, something like that, Kadena a month. $90 today. Costs you about $400 or $500 a month to run it. Plus the cost of the unit, the PDU, the wiring, the fans, the airflow, et cetera, et cetera, et cetera. Now, if you don't have that equipment, we've reached a point at a level of stagnation and, multiple years of this stagflation in proof of work space. Because, like I said, of these bribes and payoffs to exclude proof of work from the digital crypto indexes, this indexation inclusion, from the purview of retail investors, not the exchanges not listing these proof of work coins. Why? Because they're not paying the exorbitant fee to have the privilege, quote unquote, to list on these exchanges. But Fartcoin and the scammers certainly have the cash and they pay up front and they get listed. Whereas these decentralized organizations and digital commodities, most importantly for regulatory clarity, is free from any centralized direct source. Now you would think, and again, like I said, and I was talking about earlier, I've talked to many of these C-suite executives, and they simply say, oh, well, we can't just list. And I say, well, I'm looking here, and you have multiple open, fraudulent scam layer 2 coins on tokens on your exchange that are down 99+%. Why do they sit there on your exchange? Who paid you to keep it there? So this is why even something like Kaspa, we can go on and on. I try not to talk exact ticker symbols. I try to speak in a broader context, but obviously sometimes we must. But any of these organic projects, regardless how you feel, that shit doesn't matter. Just talking broader context, proof of work versus proof of stake. There is no other place to put your money than proof of work. Proof of stake is not crypto. It just isn't. And now, when you get into something like GeoNet or Wingbits or something like that, that's an on-chain corporation, sensor-based, quasi-mimicking proof of work on a proof of stake network. Okay, that's kind of another discussion, perhaps a little bit, too offside to some. But again, so there are always exceptions to the rule, but very few. And I just think it's important to remember that in this case, without buying tens of thousands of dollars worth of equipment, the average investor or average person can come in if they can navigate through the protective layers of the payoffs of the publication networks, Messari, Token Turbo, blah, 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 discover the proof of work, understand proof of work, and then navigate through no man's land to end up in these low liquidity exchanges to purchase these proof of work coins will find themselves able to purchase a wide array of absolute top tier innovation from some of the smartest, most honest, and complex systems being built today. And for some of them, you can do it for literally the definition of pennies on the dollar. So, even something like I said, like an ergo test, something 90+% already produced. You're being paid 9x in terms of its cost of production to take it off the exchange's hands today. That is something that won't last forever. Now, if you add up the market cap of all of what I would call the investable bucket of proof of work coins into one basket, it wouldn't even equal probably half of Ethereum. Okay. So just like the Winklevoss guys, like I alluded to earlier with the Zcash ETF, now the SEC allows you to make a basket of crypto projects, not just one, right? So when they make that proof of work ETF, that couple $1 million in seed funds to start that ETF is going to literally buy large percentages, if not in some cases, upwards of 75% of these networks on day one. And they will control them forever and deny you the ability to have custody of those coins. So you'll get paid if you're holding them in self-custodial wallets and you've stayed the course, and et cetera, et cetera. But guess what? They also kind of new to the network. So it's, that's a whole other conversation as well. But my main point is, in an ever increasingly expensive market, these coins, this asset class of proof of work coins has never been cheaper than it is today. And you don't even need to buy it. No, sorry, mine it. You can literally buy it. And again, I was always against this strategy, but it's reached a point now where, oh my, it's impossible to ignore how pronounced that discount is to the cost of production, to what it is now. To think that someone had, at the time, the most advanced hardware imaginable, running 24/7, producing these coins, and they're just selling it for pennies. Many have gone under. Many have moved on. Many converted most to Bitcoin, etc. The options are endless in terms of thinking what they did. But regardless, the reality is massive percentage of these networks are sitting on exchanges, being valued at zero. In many cases, and I swear to God, 80% of these networks that I look at, excluding something like Bitcoin Cash or Monero or whatever, there is upwards of 5 times more value attributed to the hardware securing the network than the overall market cap of the network itself. That is astounding. And again, it doesn't stay like this forever. Nobody wanted to invest in the space stocks when they were $1 or $2 a share. Then the space ETFs came out. Then the contracts for Space Force started to pay. Now you can't get Planet Labs for under $35. Okay, but who wanted it to? No one wanted to listen. No one wanted to do the work. Graphene stocks are beginning to have that same thing, but again, no ETF, etc. So you're kind of, there's your little Q of the week for equities, okay? In terms of if you really wanted to approach this through that lens of being extremely early in an underinvested and misunderstood asset class. Now, or sector, sorry. The main thing, yes, of course, I'm not hard to get hold of. My phone number has not changed. I'm here. A handshake ASIC. By the way, again, 50% of the supply was just burned. The entire developer fund was just burned. And it's like a $3 million market cap, as an example. I was just sitting there. and they haven't made the ASICs for years. And you think that an antiquated, sorry, piece of hardware, sorry, would be absolutely worthless. And guess what? It's actually more valuable than ever. But in terms of dollars, you can get it for the price of shipping it to your house. That is how little value is attributed to these. Now, they won't make a new ASIC until the price goes up. So you can buy. I had other offers for some of these ASICs when I was talking to guys. You pay for the shipping and give me $100, you can take it. These things were $10,000, $20,000 not long ago. Now, what's even more fascinating is that they are not made anymore. So once those chips go, over time, kind of like a classic car, one breaks down, one rots out. Next thing you know, there's only a few examples left in the world. How much is that worth? And if you're a true supporter of crypto, you would see that this is becoming a lost art. I'm not saying it's going to be the Smithsonian. What I'm saying is it will reach its max pain before it gets better. And I truly believe, as people figure it out and the market figures it out, this will change. So, exactly. Maintaining this infrastructure, these hardware pieces of equipment, these ASIC chips, is going to be an ever increasing skill to have. But the question is, how long until the market figures this out? Because it's not dying, quote unquote. The whole market is run and governed and priced in a fraudulent US dollar. And USDC, is a fraction of Tether. So, not a long way to go in terms of legitimacy. And this, it kind of reminds me, if I had to compare it to the collapse of the USSR, right? In that chaos was also some of the biggest opportunities. Obviously, if you were on the winning side of it, and you knew how to navigate it, you knew how to, get in the grooves and remove some of truth's protective layers to access some of those opportunities and see it through the end. So, the problem that I have is sometimes your thesis comes under question as the sands of time prove it to be too early, or as you bang the table, no one listens. But I always found that right when you're ready to give up is actually usually the best time to double down. So the green lights are just flashing. Now, whether the payoff is received immediately or another 2 years, again, is not of any consequence to me. Again, when you weight these portfolios the way you choose, and then you hedge it with other things. So again, crypto going down has not hurt me in any way whatsoever, because the equity portfolios have never been higher, and this pendulum, and you can afford to, and again, you can rebalance and you can adjust as you go. So that's a whole kind of another thing. But the main picture I'm trying to paint here is much of the community is either solo or given up or bankrupt, or their equipment is breaking and they don't want to replace it. The algorithms are legacy coins now. They're over 5 years old in many cases, and they're mature. They've remained operational through thick and through thin. And the prices have come down because the market makers have stopped pumping them, which begs the question, are we not more organic than ever? I would argue yes. Are we in a rediscovery phase? Yes. Someone will blow the dust off this and find out that the lie they've been told of proof of stake this entire time leads to proof of work. And that resurgence, especially with AI, because AI is a productivity enhancement. And especially because of its open source nature, those who are productive, those who are innovative, those entrepreneurial spirit type of folks will rediscover this. And they will find out that what they've been building on and what they understood as crypto is completely false. Go to Venezuela, go to Cuba. Crypto is the currency. They don't have one. So, for example, I'll leave it there. Okay, so, well, again, this is the whole thing is meaningful adoption. Well, what is meaningful adoption? Is that a bunch of bot trading and market makers and leverage speculators piling in all at once for an extended period of time to add a zero or remove a zero from the price? I would say the fact that it exists proves its worth. And the problem I always have is, especially using the markets, as I had alluded to before, the reason why these space stocks absolutely catapulted to the upside was not because of people saying, you know what, Pat's thesis was right. And that was actually the passive investing into the UFO ETF that led this gradual increase of capital. And now with the SpaceX IPO, it's only set to continue. Yet no one talks about the Space Force budget increasing next year and into 2027. So again, as they say, fundamentals don't matter in the short term, but they are all that matters in the long term. Right, exactly. And those coins have been around like 10 years. So, it's really a matter of, can you see it through to the end? Can you persevere? And as they always say, you get crypto at the price that you deserve. So if you bought it high, well, you deserve to get it high. But for me, especially in a communist country like Canada, with 13 years of continued communist rule, and 45% of employees directly or indirectly work for the federal government, an imperative and key metric to understand is that if you are outside of the United States, which has 56% of the world's wealth and climbing, these currencies, like Canadian, are upwards of 20% inflation if you add in the cost of goods and services, plus the annual inflation from substantial government spending in every aspect. So for me, I'm trading in any Canadian dollars that I can at an exponential rate into whether it's Bitcoin, whether it's Bitcoin Cash, whether it's Monero, et cetera, et cetera, et cetera. Because I know at least those currencies had a cost to produce them. If you go to a place like Nigeria, again, Venezuela, Cuba, any country, even Colombia's peso, has at least a 10% annual inflation rate. And that's on a good year. And like the virus, it was upwards of 40, 50% wipeout. Okay. So as the world gravitates to becoming more and more like a Venezuela, the third option, rather than gold, stocks, or bonds. The fourth option, sorry, I should say, is to opt out of the system entirely and go with this digital realm of crypto, not for it going up or going down, but for it being unable to be duplicated, confiscated, censored, blah, blah, blah. So, and one can debate who the largest beneficiary of the continued geopolitical risks taking place. But what I can tell you is I can have Caspa ASIC sitting there and a Caspa node over there. And I can send that to anyone else who's doing the same thing. And nobody can stop me. And even if they cut my electricity off, they can't shut off the network itself. This is the most powerful. Again, the most simple things have been lost. They've been confused with leveraged fart coin trading and these scams. And somehow XRP is legitimate, and Flux has my best interest. I mean, excuse me. When did this become the norm? Well, the question is, it always has been. The answer is, what are you doing about it? So I am sure to tell anybody what I can and what I know, which is very little. And I am very comfortable saying that I know nothing. But what I do know, and again, it's always important in a war zone to know where not to walk. So I know where not to go. And that's the first step in leading me where to go. And again, I had someone say, but proof of stake has all the liquidity. Well, no, it doesn't. Those numbers are greatly exaggerated. Van Buren wouldn't be selling $70 million worth of Ethereum every chance he wakes up and takes a piss. So these dynamics will continue. Again, the market not figuring it out for so many years is exactly the largest outline of the opportunity that I'm trying to describe. Oh, now I'm in a little bit early. Of course, I suppose we all are. Will Bitcoin continue to go up? Of course it will. That's obvious. And are there ever going to be an end to the scams? No, there will not. Exactly. Liquidity is getting paid to the banks in interest. Liquidity is going to high oil prices, high inflation, and this leaves, and an ever increasing size of government leads to an ever decreasing size of the private sector. Again, I live in Canada where there is no private sector and there is no savings. So, did you know that half of the top 15% of Canadian earners have left the country as of last year? So to those Canadians out there, you are not planning an exit. If you are not planning some type of safety, I ask you why. I also ask you why on earth you would hold your savings in Canadian dollars rather than US dollars. Capital controls incoming, by the way. And that's only going to speed up the flow. So, what is the point here? Well, point is, 3-4 years into this journey. Yes, exactly. Yes, at least I can speak on to Canada for the first time in this British colony's history. The population decreased by 300,000 It's never decreased year on year, ever. And that's with around the same number of newcomers coming into the country. So what does that tell you? Is that people are saving up what they can or doing whatever and leaving. That's why they're trying to limit the amount of remittances that can be leaving Canada. Again, capital controls. Now, also in resource-rich countries like Canada with immense reserves of gold and oil and an abundance of other commodities across the board, how can inflation be happening at such a rate? Because the government spending is that immense and is growing at such a large rate of change. Again, everyone's focused on oil going up. It's the rate of change in which it went up that causes those economic shocks. Okay, and don't be worried about the price of oil. Be worried about what the price of that oil does as other input costs and everything else, including electricity. So since I started mining crypto, the price to produce these digital commodities has doubled. Again, another commodity. Right, exactly. It's not what you make, it's what you have to spend. And the problem with this is that everybody's having their savings globally inflated away, which leaves very little money as well as number of speculators and investors to experiment with these small proof of work networks. And I think, as the question earlier, Peter, about the adoption rate, well, kind of like XMR, it will be adopted by necessity, not necessarily as a pastime. Right, it will be adopted as required. So, I am also terrified as I am excited as to the day that crypto truly begins to be understood. There's people that are just now beginning to understand what inflation is or how governments work. I mean, we all learn things at different rates, right? Just because we're the first ones at the party does not mean we are the only ones showing up. Thank you for Red Bull for sponsoring this broadcast again. And again, the best sponsor ever, Export A Cigarettes. Thank you. Now, I will continue to try and do these broadcasts, but I've found with these that often my message is misconstrued or misunderstood, or if I do mention any ticker symbols, people kind of write them down, and then they call me 6 months later and say, this happened. Well, you never called me directly. You never retained Trillium Capital's research for services. So I don't really give a fuck what you do with it. My main thing that I'm trying to say is think outside the box while you still can. Because things are becoming increasingly desolate. Terrible demographics, low to zero fertility rate, increasingly dictatorial governments, increasing inflationary pressures and currencies, government entitlements, meaning pensions, okay, and retirement plans, blah, blah. They are unfunded. The only way to fund them is to issue bonds where the central bank buys, therefore giving the loan, which causes insane amounts of inflation. So they cannot inflate Bitcoin. They cannot inflate any proof of work crypto. And like I said, the real opportunity, even if it's, again, I always tell people $100 is equivalent to $1,000, $10,000 invested a few years ago in some of this stuff. That's exactly right. So there's just so many things to go over and so little time. And again, stock sector of the broadcast is graphene and space. I know I've been saying space for 6, 7, 8 years, but graphene, I have been saying for a while. There are a few names that I would. And again, it does line up because you need diamonds and graphene for quantum style chips, as well as battery improvements, plastic improvements, all of which are kind of components of computer chips. So kind of goes with the theme. Now, in terms of crypto fucking news, Wingbit's token generation event is finally coming on April 22nd. Obviously, GeoNet has their annual halving. Now, Nexa is having its first halving in 20 days. They're also going to be doing a hard fork that will be going to FPGA. Very interesting enough. So they're going to kick off the ASICs finally, but that also means no GPUs. So it will be very interesting for the stranded assets of the average VU35P FPGA holder from Osprey. Be able to take the dust buster to that thing and turn it back on until the lights go up. So it's going to be very interesting to see how that network reacts. We should do a Nexa halving broadcast. That would be great to do that live time. I'll write that one down, actually. Now, hopefully Corsair will sponsor that. Yes, Iran is accepting Bitcoin payments for the oil tolls. But that's the beauty of it, is that anybody and everybody can mine, produce, use, and take custody of Bitcoin. This is kind of like the argument for self-defense, right? If the government can have it, and private citizens that are law-abiding can have it, well, the other point of the triangle is that it will also be used for crimes. So, more just kind of proof of concept, and conceptually, proof of work is the best that you can truly do here. And again, space stocks continue to go through the roof. There was a really interesting, I believe it was Air Force Research Lab, but they partnered with a company called Spire, which is publicly traded. But they used blockchain in space. It's called Space Chain was the experiment. I'm not advocating investing in any of these. I'm just saying. And they determined that one of the best use cases for blockchain was actually in space because of the time, gravity, what have you. Very intriguing. So I think some of the use cases for blockchain are just kind of emerging now. But the main thing is active developers. There's about 4,000 or 5,000 left of full-time blockchain developers. Of that, how many are proof of work specific to various algorithms? I mean, how many full-time devs are there for Warthog? Not too many. But those few armed with AI tools can really make absolutely beneficial to the networks, obviously, but also to humanity as a whole, applications that can be used in a much broader context going forward. Because the innovation just is not on proof of stake. Obviously, because proof of stake is proof of scam or piece of shit, as what you think it stands for. So I just think it's pretty interesting. So we're in a never-ending bottomless pit, but eventually it will trough, and we'll get through it. It's great to see some of the OGs kicking around still. That's very encouraging. So although we are wounded, we are still on the battlefield. So Lock and load, and stay solvent, stay mining, build your team, and continue to allocate funds appropriately. And I'm going to go for a cigarette. And again, I'm not hard to get a hold of. Let's all get in touch. Let's have a coffee. Let's have a smoke. Let's figure it out. Formulate new strategies, and keep it going. Okay, I will do another one soon, guys. And to those of you 5-10 years from now, when the process, when the ideology, the thesis is proven correct, finally, thanks for listening. Take care, guys.